What's up, everybody? Redfin has just come out with their housing market predictions for 2023. And some I agree with, but some I really don't. They predict sales, mortgage rates, home prices, rents, and a lot more. So let's take a look at their 12 housing market predictions, and I'll give you my opinion as well. So let's just dive right in. Prediction number 1, home sales will fall to their lowest level since 2011, with a slow recovery the second half of the year. Redfin says that they expect about 16% fewer existing home sales in 2023 than 2022, landing at 4.3 million, with would-be buyers pressing pause due mostly to affordability challenges, including high mortgage rates, still high home prices, persistent inflation, and a potential recession. They go on to say that people will only move if they absolutely need to. As it stands, existing sales have already declined for the last 9 months, so this is no surprise. I mean, we've been talking about the affordability crisis for a while now, and at least where I am in the DC area, prices haven't come down hardly at all, and interest rates are still so much higher than they were 6 months ago and double what they were a year ago. Even across the country and in some of the more bubbly markets like Austin, Phoenix, and Boise, I still don't believe that prices have come down enough to make buying a house affordable right now, especially for first-time home buyers. So yeah, I think Redfin may be right about this one. I do think that we will have much less sales next year in 2023. Prediction number 2, mortgage rates will decline, ending the year below 6%. Redfin expects the average 30-year fixed mortgage rate to decline to around 5.8% by the end of the year, with the average 2023 homebuyers mortgage rate to be around 6.1%. They go on to say that mortgage rates dropping from 6.5% to 5.8% would save a homebuyer purchasing a $400,000 home around $150 on their monthly mortgage payment. To look at it another way, a home buyer on a $2,500 monthly budget can afford a $383,750 home with a 6.5% interest rate. That same buyer can afford a $406,250 home with a 5.8% interest rate. Still, that's much less affordable than it was a few years earlier, with a 3% rate, which was pretty common in 2020 and 2021. That same buyer could afford a $517,000 home. As a real estate agent, I'm not qualified to quote rates, but I can tell you that lenders I work with on a regular basis do feel that rates will be in the 5s next year. Some even think they will be as low as 5% by the end of 2023. Prediction number 3, home prices will post their first year-over-year decline in a decade, but the U.S. will avoid a wave of foreclosures. Redfin predicts the median U.S. home sale price to drop by roughly 4%, the first annual drop since 2012 to $368,000 in 2023. That's due to high interest rates and final sales prices that are starting to reflect homes that went under contract in late 2022. They go on to say that prices would fall more if it wasn't for a lack of homes for sale. Redfin expects new listings to continue to decline in 2023, keeping total inventory near historic lows and preventing prices from plummeting. With prices remaining still above pre-pandemic levels, the chances of a wave of foreclosures next year is highly unlikely. Very few homeowners will find themselves underwater with next year's predicted price declines. This is due to most homeowners securing their mortgages when rates were super low and benefiting from the soaring home values during the pandemic years. Well, this makes sense to me. Between the stricter loan approval requirements and the escalation in home values over the last 2 years, I also don't think we're going to see a massive onset of foreclosures next year like we did back in 2008. Prediction number 4, the Midwest and Northeast will hold up best as the overall market cools. Housing markets and relatively affordable Midwest Midwest and East Coast metros, especially in the Chicago area and parts of Connecticut and upstate New York, will hold up relatively well, even as the U.S. market cools. Those areas tend to be more stable than the expensive coastal areas, and they didn't heat up as much during the pandemic home buying frenzy. Redfin published a list of the markets they believe will hold up best in 2023. Here are quickly the top 10. Number 1, Lake County, Illinois, Chicago, Illinois, Milwaukee, Wisconsin, Albany, New York, Baltimore, Maryland, Elgin, Illinois, Rochester, New York, Pittsburgh, Pennsylvania, New Haven, Connecticut, Hartford, Connecticut. Well, we kind of already discussed this in last week's video. My opinion is that if you already live in one of these places or you have to move there for work, this is really good news. I just don't see people flocking to a lot of these places like they did with the Sunshine States, where the lifestyle is more attractive. But that's just my opinion. Definitely tell me what you guys think. Prediction number 5. Rents will fall and many Gen Zers and young millennials will continue renting indefinitely. Redfin expects U.S. asking rent to post a small year-over-year decline by mid-2023, with drops coming much sooner in some metros. Some large landlords are likely to offer concessions, such as a free month's rent or free parking, before dropping asking rents. They go on to say that the rental price declines will come from an increase in supply due to an increase in multifamily construction, as well as sellers will now rent out their homes instead of selling them to keep their low interest rates. Increasing rental supply and declining prices, along with high mortgage rates, limited inventory, and other affordability barriers, mean few renters will become buyers next year. Instead, they'll become move-up renters, upgrading to a larger space and spend their money investing in stocks while renting indefinitely. Well, this just makes me sad. There's just something so unique about owning your own home. It's tangible, and we create memories here while building equity and hoping to leave something to our children. At least that's how I see it. Prediction number 6. Builders will focus on multifamily rentals. Builders will continue to pull back on constructing new homes next year, with year-over-year declines of roughly 25% in building permits and housing starts continuing in 2023. Builders will shift away of the construction of single-family homes, which they ramped up construction of during the pandemic and still need to offload, and instead focus on constructing more multifamily rental buildings, as rental demand won't fall as much. I think we already covered this, so I don't really have much to say on this one. Prediction number 7. Investor activity will bottom out in the spring, then rebound. Real estate investors will purchase around 25% less homes than a year earlier, with purchases likely to bottom out in the spring. Money is just too expensive now for the investor-builder model to make sense. They also note that there are fewer iBuyers in the market, and we know that they shut down the Redfin iBuyer program recently, so they do say that this also will slow things down. But if inflation slows down and the Fed eases on its rate hike, Redfin predicts that investors will re-enter the market in the second half of the year, taking advantage of slightly lower home prices. Well, we all know that the failure of all those iBuying companies definitely scared off some investors from entering the market right now, but if rates go down and prices go down, I can see them re-entering the market. Prediction number 8. Gen Zers will seek jobs and apartments in relatively affordable mid-tier cities. Redfin writes that the Gen Zers are entering the workforce with more remote work opportunities than ever before, which means they'll have more flexibility in where they choose to start their careers than the older generation. They can prioritize things like affordability, lifestyle, weather, and proximity to family. Well, I'm seeing more young adults come back and live with their families to save money when they start their first jobs, or share apartments with friends to offset the cost. I don't know many of them that choose to live in just a random place for affordability reasons without some other reason to be there. But that's just my experience. Definitely tell me if you guys do think that Redfin is right about this one. Prediction number 9. Migration from one part of the country to another will ease from the pandemic boom. Redfin expects the share of Americans relocating from one metro metro to another will slow to around 20% in 2023, down from 24% this year. That's still above the pre-pandemic levels of around 18%. In 2023's slow market, there won't be another Austin. Instead, Redfin thinks that people who are relocating will be retirees or remote workers who are still seeking out a more affordable place to live, will mostly go to places with no state income tax, like Florida, Texas, and Tennessee. Hey, if you can take advantage of living in a state that has no state income tax, I say, why not? I just don't think this is unique to 2023. Prediction number 10. Rising disaster insurance costs will make extremely climate-risky homes even more expensive. Some Americans will be priced out of climate-risky areas like beachfront Florida and the hills of California because of ballooning insurance costs. Redfin expects disaster insurance rates to continue rising next year and beyond, rendering housing in some areas more expensive. As disaster insurance is now a prerequisite for a mortgage in many risky areas, those areas are likely to become more concentrated with affluent, all-cash buyers. Once again, this is nothing really new in my opinion. I mean, flood insurance has always been super expensive, and I can only imagine how expensive disaster insurance is. And where it costs more money to live someplace, more people won't be able to afford to live there. And I can tell you from personal experience in helping my mother get home insurance in Florida, it's ridiculously expensive. Prediction number 11. I've run out of fingers. More cities will follow Minneapolis's YIMBY example to curb housing expenses. More U.S. cities will look to Minneapolis, which in 2019 became the first major city to eliminate single-family only zoning, for inspiration in keeping rental and home prices under control. Earlier this year, Minneapolis became the first metro area to see rents decline. Full disclosure, I had to look up what YIMBY stands for, which is Yes in My Backyard. Redfin expects more local and state governments will eliminate single-family only zoning, allowing more multifamily buildings, townhouses, and ADUs. I need to know more about this before commenting, so I'm gonna have to get back to you on this one. Prediction number 12. Buyers' agents' commissions will rise slightly as fewer agents broker fewer deals at lower prices. Next year's slow housing market is likely to reverse or at least halt the downward trend in buyers' agents' commissions. Redfin goes on to say that the hot pandemic-era housing market pushed the typical U.S. buyers' agents' commission down to 2.63% of the sales price in 2022, its lowest level since 2012. So now they think that next year in 2023 that the buyer's agent's commission will go up again because there'll be less sales and lower home prices. And I guess they're thinking that sellers will want to motivate the buyer's agents so they'll bring the buyers to their homes. Kind of makes sense. I do know that my colleagues across the country have experienced an expected 3% in the past. So if their commission has gone down last year and goes back up, I am very happy for them. That's really all I have to say about that. But what I do think, more importantly in my opinion, is that there will be less transactions next year, and that it is more important than ever to work with an experienced, seasoned realtor if you're thinking about buying or selling your home in 2023. I've been doing this 19 years, so I've been through every type of market, and I have to say, in my experience, it takes a while for some people to adjust to a changing market. So just my advice, if you are going to do a transaction in 2023, just make sure you're dealing with somebody who is very seasoned and can adjust very quickly to this changing market, because it can get a little tricky. So that's it. That's Redfin's 12 bold predictions for the housing market for 2023. So what do you think? Definitely comment below. Do you agree with them? Do you disagree with them? I really want to know. I'm kind of on the fence. I don't think there were anything that inspiring or spectacular, nothing that we didn't really already know, but that's just my opinion. If you want to see more housing market predictions, definitely check out some of my other videos. They're all from different sources, so we can get a really good idea of what everybody's thinking for next year. And if you got some value out of today's video and you want to show our channel some support, definitely smash that like button, comment below, and subscribe to our channel. It just motivates us to make more videos. In any event, thanks for watching. I do appreciate it. Bye!